Hi, everyone. This is Jason Burack of Wall Street from Main Street and independent financial journalist Eric Dubin. Welcome back to another Welcome to Dystopia podcast. This is episode number 38. We apologize for the long delay between episode 37 and episode 38, and hopefully, Eric, that we can get back on track and start doing these shows once or twice a month.
Yeah, I believe we will be able to do that. I've got a lot of crazy stuff going on in my personal life, so I apologize for the audience for my absence.
Yes, and we've had listener demand that wanted the show back, and we're cognizant of that, and we're gonna try, like I said, to get it done once or twice a month. Let's talk about gold and silver prices and also cryptocurrency prices. Gold and silver prices, you know, despite all the crazy things we're going to talk about in the show going on in geopolitics and the global economy, gold is basically stuck in the mud around 1287 right now. It's had trouble staying above 1300. Silver is having trouble staying above $17 an ounce. Meanwhile, Eric, cryptocurrencies are on fire. I saw on my Twitter feed Peter Brandt, who is a longtime stock market trader. He said this is the best bull market he's ever seen in his 43 years of professional trading. That is what he said. And he showed on charts just enormous parabolic moves in many of the cryptocurrencies. For some examples here, basically the market cap, Eric, in total cryptocurrencies, it flew through $200 billion total in cryptocurrency. That was just a week or two ago. We're almost at $300 billion in total market cap for cryptocurrencies. Bitcoin is almost at $10,000 a coin. It's gone up almost $1,000 a coin for regular Bitcoin. Almost a week, almost $1,000 up a week. Ethereum broke out of its consolidation channel really since May, and now Ethereum's at $466 a coin, almost to $500 a coin. Bitcoin Cash has absolutely exploded. I think it's the largest in percentage gains. Bitcoin Cash initially, when it did the hard fork a number of months ago over the summer, I think it was stuck at $300 a coin for a while. I should have bought it, but when I interviewed Andreas Antonopoulos and Trace Meyer, they said it wasn't a good idea. I probably should have not listened to them, speculated a little bit and bought a couple coins at $300. It is now around $1,700 a coin in only a couple months. And, you know, I could go up and down the list. Litecoin is almost at $100 a coin. It's at 86. Just insane bull market right now in cryptocurrencies. Maybe that's where a lot of the money is going that should have went into gold and silver. Eric, what do you think about that?
Well, yeah, sure. Prima facie, that's exactly what's going on. It's interesting to look at the asset class just from a philosophical point of view and from a structure of markets frame of reference. We're talking about currency, basically, and unlike comparing it to, say, like a broad class of an entire market, say like the NASDAQ during the 2000 bull market, you know, the blow-off top in March of 2000 after a decade-long run, with currency and in a fiat paradigm world where we have all this liquidity sloshing around, in a world where there's $300 billion worth of liquidity being created by central banks every dang month flying into the marketplace, where's it going to go? Well, as currencies are concerned, it's pretty easy to see them being sopped up into Bitcoin. It only takes a small percentage of the overall flow of liquidity that's being created worldwide by this central bank fiesta to create bubbles. And the kind of bubble and the parabolic move that we're seeing, that's really the indicator. I mean, I just drew an analogy to the NASDAQ, and I'll draw that full circle. The NASDAQ pretty much doubled within its last year blow-off top run into March of 2000, and here we've seen Bitcoin, what was it, like, it's about $1,000 at the turn of the year, and it's now over $9,000.
Yeah, in January, Eric, I think it was at 1,000, January of 2000.
Exactly.
Yeah.
And we're getting that kind of a magnitude of a blow-off top because of just the qualitative difference between, you know, the nature of the market in and of itself and just the fact that it's currency compared to, like, you know, 500 companies trading on the NASDAQ and all competing for flow of income. The crypto paradigm has about 4 currencies that are representing 85% of the market capitalization, so to speak, of all of the currency's value out there. And we will go over $1 trillion probably pretty soon because of the fact that we've got a world where $100+ trillion of liquidity is the paradigm that we sit in. It's kind of a symptom of just how crazy fiat systems have come. So I think that's really one of the interesting things about the bubble that we're watching and how it relates compared to other market bubbles.
And to add to your points there, Eric, I think Bitcoin now has a larger market cap total value than McDonald's, and I think the investment banks, Morgan Stanley, and maybe even larger than market cap than Goldman Sachs now. And Bitcoin's market cap is over $150 billion. I think that puts it, Eric, Bitcoin, if you're going to count Bitcoin as a currency compared to other, government currencies, I think it's a top 20 or 30 currency in the world now. And, before this bull market's over, it may move into the top 10 or top 5.
Exactly. And, philosophically, people try to wrap their heads around what the heck is going on with this cryptocurrency paradigm and this giant bubble. Well, the reason why I spend all the time talking about the comparison to other asset classes is that it's pretty insightful when you think about just monetary flows. This bubble is actually a shadow bubble of a bigger bubble. That's the way you have to think about what's going on in the cryptocurrency world, and whether or not you believe that the cryptocurrency world is going to continue to go higher depends on what happens with the bigger bubble, and that's what's going on with the monetary system. And it's going to continue to go on because they're going to continue to inflate the system until everything crashes. That's the real interesting inflection point that's coming on the horizon. What happens when the regular financial markets crash and people react to it? Is it going to send Bitcoin and all of the other cryptos shooting higher? I think it will. And then what happens when governments respond to that? That's going to be another interesting question that would evolve over the next, 18 months following some mega financial crash. We're living in some amazingly fascinating times.
And we're almost at Dow 24,000 as well. The Dow, even when it has bad days, the bad days aren't super long. There's not big dips. The dips are continue to be bought. Bad news seems to be good news with the general stock market index. But Eric, for listeners who are not familiar, you lived and worked in San Francisco area, Silicon Valley. You were part of the technology bubble. You're writing on Microsoft Money, I think one of the first major writers there. Is this Bitcoin bull market and cryptocurrency and Bitcoin, is this reminding you a lot of the technology bubble?
Actually, there's some, like I was saying, the rate of its appreciation, certainly within the last year, and it's kind of a blow-off move, is a lot bigger. The magnitude of its change and multiplied by 9 times in a year is pretty sensational. And it's because it's qualitatively a different kind of market. It's more reflecting just aggregate global macro central bank flows spilling into the currency, and therefore it sops up a lot, and it therefore has the ability to run even to levels that would really make people crazed and looking and scratching their heads wondering what the heck's going on. So it really is a creature all in of itself. It's quite unique. I mean, a lot of times when we've seen asset bubbles and they're actually companies that are producing products and so forth, and they're, people are clamoring to get into some kind of an asset, that's a very qualitatively different kind of market dynamic versus just simply currency. So this is a unique dynamic. I would even shy away from calling it a pure bubble because it actually is a bubble of a bubble. It's a reflection of a bubble, and it's a pure currency bubble.
I think Wall Street, Eric, has cryptomania right now. So for contrarian, I'm not saying that we're going to see a crash because in cryptocurrency, but it seems like anytime there's a dip, even 20 or 30%, like I did a short video on Ethereum and I was wrong that Ethereum would crash. There was a 20% correction in Ethereum and it was only a day or two, and the dip was bought like crazy. And you're seeing this in all the top 7 or 8 cryptocurrencies where if there's any dips, the dips are being bought like crazy. But on Wall Street, I subscribe to this app called Shaper, SHAPR. It's a business networking app. I was up in New York City area in May for my cousin's wedding, so the app is broken. It had my GPS location as New York City, and so now I even though I'm not in New York City anymore, in that area, I still match with like all these Wall Street people, Eric, and they've almost all of them, a lot of them, many of them have changed their profiles on this networking app that work in investment banks and hedge funds, and they all have blockchain and cryptocurrency in there. So it's not just Silicon Valley that has Bitcoin and blockchain fever, it's Wall Street as well.
Hey, you drew an analogy to the NASDAQ bubble of the 2000 period, and then one thing that is interesting that people would appreciate is that back in the psychology of that bull market, we literally had, TGI, Fridays, restaurants, and local pubs and whatnot. Instead of having baseball games on, they were playing CNBC. the 50 some odd percent of the American public's imagination was captured by the move in the Nasdaq, and the broad-based participation in that bull market makes what's going on with cryptocurrencies look like child's play. So there's something to consider. I mean, I frankly have no idea how many people in the United States or what kind of percentage of assets under management or what have you are participating in the Bitcoin cryptocurrency universe right now. But I would imagine, certainly when it comes to the number of people individually, that it's actually probably, relatively speaking, pretty small. So, it's astounding that we're at 9,000 plus Bitcoin, but I have a feeling we're going to go a lot higher.
There's a lot of people on Main Street that have been buying some of these coins. A lot of our listeners who comment have been liquidating, telling me that they've been liquidating their physical gold, physical silver, and mining shares to chase these cryptocurrencies higher. But I think the majority of the trading volume is still out of Asia. But, now that the CME is planning this Bitcoin futures contract, which, by the way, they're not even going to settle in Bitcoin. This is going to be a cash-only settlement, which is ridiculous. I guess they're just trying to steal some trading volume off the Bitcoin trend. And so I think there's going to be more hedge fund money maybe playing in the Bitcoin futures market. But it's going to be like gold and silver. There's not going to be any real settlement in actual Bitcoin. So I think it's stupid, but that doesn't mean that if you're a big shot hedge fund manager and you can't move a lot of capital into the cryptocurrencies, that doesn't mean that they're not going to go play with the Bitcoin futures contracts then. But yeah, I think the majority of the trading volume still, in my humble opinion, I had Roger Ver on a couple weeks ago, and he said the majority of trading volume wasn't in Asia anymore. I disagree with him on that. I think the majority of trading volume for cryptocurrency is in Asia.
It is. That's documented.
Yeah. I don't know if it's 90% anymore, but I think the majority is still in Asia. And I think a lot of it is because China has created the majority of the credit creation in the last 5 to 7 years. And, there's a lot of evidence to prove that. I had a Daniel Lacaille article. I spoke to Daniel about this, and he also wrote it for Mises.com. And he said, in 2017 alone, China has created more credit than the U.S., the European Union, and Japan combined. So, and I think a lot of that credit has started to leak into more speculative assets. It's been in, it's been in stocks before, it's been in real estate, it's been in bonds, but I think a lot of it has gone into crypto because it's in an uptrend. I mean, face it, Eric. I think it's human nature to not be contrarian, not want to wait a while to be a value investor. I think it's human nature, unfortunately, to chase whatever's going up in price, and I think that's what we're happening on now, where it feeds on itself. Now, I want to transition to gold and silver. In your opinion, why do you think copper, lead, and zinc prices have rallied a lot lately?
Well, I think it gets primarily back to what we were just speaking about when it comes to central bankers dumping $300+ billion into the marketplace or into their banking systems, and then that spills into the marketplace. Every month we are seeing asset prices respond to that. They're trying to engender inflation on a global basis because basically we had a global depression that's been hidden ever since 2009, and they've been fighting it. Jason's thesis that all of our listeners know about when it comes to how the copper and base metal industry can see higher prices that would elicit more silver to come to the marketplace. It's definitely something that is interesting that you've put out in how you're thinking about it. And Jason and I were talking about this earlier before we started recording. There's definitely a dynamic here where the higher prices of copper are eliciting more base metal production and in turn getting more physical silver to the marketplace to prevent problems with the physical market. But ultimately, I think that the biggest driver that we see behind higher prices is just that we're seeing so much credit being created in the marketplace, particularly in China, like we were just speaking of.
I think there is some justification, Eric, for zinc having a price move higher because there was some really large base metal mines that had a lot of zinc supply, and those the production on those had declined a lot in the last few years. The grades were dropping, and there was even on a couple cases those mines were going to close entirely because the reserves had been exhausted. Like those mines have been running for decades. So I was talking with Chris Marchese and other analysts that have looked at the zinc. The supply-demand fundamentals for zinc for the last couple of years that were predicting a big move in zinc for a couple years now, and it hadn't come yet, and finally it's come. And so there's not a lot of future zinc supply as well. So I think zinc was justified, but for copper and lead, which have also had enormous rallies, I really don't think, given the dynamics of the global economy, given the cracks in China. Yes, China has had big credit expansion still, but the global economy itself is not doing well. China's demand for base metals has, even with this $1 trillion they plan to spend on the Silk Road and some infrastructure involved in there, is still not replacing the demand that they pulled forward the last 15 or 20 years when they joined the World Trade Organization. I mean, for comparison's sake, for the demand of copper and base metals and iron ore and steel that China pulled forward, Eric, China used more cement and iron ore in 15 or 20 years than the United States did in all the 20th century.
Yeah.
So it's just a mind-boggling number, and there's a lot of, you know, investment bank analysts and some other analysts out there that really are not, let's say, discounting or making, I think, the proper assumptions that Chinese demand for those base metals and the other things I mentioned was not going to fall off significantly. So they didn't discount that Chinese demand for cement, Chinese demand for iron ore and steel and copper would not be able to sustain at those high levels that they had in the past.
Yeah, but we've also existed in a world where we have countervailing forces that are coming out of just sheer paper pushing. And the creation of credit in the Chinese system and how it hooks up into the Shanghai Metals Exchange and the warehouse system, and when individual companies, never mind even the banking system in and of itself. I mean, the majority of the gears that create this credit, when it's created, is the actions of individual companies trying to deal with, you know, their inventories and putting out inventory purchases for copper that they may have, you know, in within their balance sheet, and they'll use that to create as collateral more credit for their ability to finance their operations. And as this happens, it creates credit within the entire, in aggregate, the shadow banking system in China. And we're talking about, you know, on the order of trillions of yuan when you consider how much the base metal system, and in particular copper and lead, you know, interact in their banking system. It literally is like a collateral asset. You know how we've talked often about what happens in the shale industry and oil and how that interacts with, you know, Texas banks and things like that in the United States, and how it can turn around and bite the credit system here. Well, the Chinese have been trying to deal with that too when it comes to how they deal with their capital flows, and, you know, so the whole issue of rising copper prices is directly linked up with what they're doing with their credit system too, and they keep stepping on the gas pedal, stepping on the brake. They're trying to like jiggle the system so it doesn't blow up. They increase bank requirements for lending on some areas for, you know, sections of their economy, or you know, smaller banks versus the four major banks that are hooked up to the state, on and on. So I mean, they're just trying to just juggle things, and this whole higher copper price most certainly is linked to the shadow banking system. And the question that I have, that I just kind of throw out to everyone in our audience, and I talked about this with Jason before we recorded too, is it's an open question as to the degree to which how much the higher copper price might be, you know, targeted by bullion bankers trying to create more silver price, you know, support for silver prices.
Yeah, it's tough to know, Eric, whether the bullion banks did this or they're just indirect beneficiaries of this. But they are benefiting from this because they can basically keep the paper silver price capped, and they have access to more supply due to higher base metal prices of silver and silver byproduct available from higher base metal prices, that silver probably would not be available. And we're talking tens of millions of ounces of silver that have come to market. When we got, you know, copper hitting what, $3.25 a pound about a month ago or so, you know, if we were still sitting at copper at $2.50, that would be a disaster. I mean, it's just, so clearly, or below, or copper below 250, copper at 230, 220. I mean, one of the largest copper mines in the world, the Freeport-McMoran one, there was a tax issue, and that was because copper prices were low and the mine wasn't making as much money as people expected. Yeah. So, you know, there was a fight over taxes there and whether they would shut down the mine, and there's obviously this is what happens, because governments in some of these countries where there is mines, sometimes a big chunk of the government tax revenue is only from the oil and gas production or only from the mining production. And so, when the price of the commodity goes really high or it goes really low, there's fights over the governments want to renegotiate the terms on that.
Yeah.
But potentially, Eric, like you said, I think there could be someone would have to do the work. Maybe Steve St. Angelo will, because I know he digs deep into a lot of the economics of each mine. But at a higher copper and lead price, this could potentially be keeping online or adding another 100 million ounces per year of silver byproduct to the annual supply that would not be available if the copper and the lead prices were let's say at normal levels, a lot lower than they are now.
Yeah, well, I mean, the correlation is there. There's no doubt about that. Your thesis is valid for that reason. I'm just wondering how much there's causation linkage between an objective with the bullion banks actually going out and trying to target elevating prices of copper so as to elicit further incentive for companies that are producing byproduct silver. There's no doubt that, this is primarily linked to what's going on in the monetary system, but I do believe that you might be onto something. And the way to test it, I think, where the footprints will be, is not so much the analysis of shifts in the physical production for miners by themselves, but that's going on the LBMA and the Shanghai Metals Exchange when it comes to shifts in terms of open interest and how that will correlate to the exchange rate, as well as the shifts in the actual aggregate monetary measures that China publishes that are actually bastardized, but for the sake of at least knowing what directions they'll shift up and down, you'll still be able to see some interesting correlations. I haven't been able to do that kind of work because I don't have free time, but I'm just throwing that out there for anyone who wants to dig in it. I think that that's where the footprints to test the theory will be found.
But we do know, Eric, that the primary silver miners they've been getting their asses kicked since the paper bear market started in 2011, but it's gotten to the point now where a lot of the primary silver miners, and Steve St. Angelo put out an article about this in the last couple weeks, adding to my points here, but some of the largest primary silver miners in the world, Eric, are getting out of the silver business.
Yeah.
So
again, you're right that what's happening with prices and how that impacts the market is definitely up and running. But I think it's probably more monetary versus bullion bankers twirling their mustache and trying to think about how they're going to go out and push copper prices up so as to save their butts in the silver market.
Well, yeah, we don't know what the exact causes are, but the effects, the effect of everything is that the primary silver miners are in trouble again.
Yeah.
So, and what the Coeur d'Alenes, the Heclas, the Silver Standard, who changed their name to SSR Resources, what they've done the last 2 years is they've been trying to get out of the silver business. They've been going and buying gold mines that they can make profits from gold mining instead the last couple years. And a lot of their silver mines that are still running, they've been blowing through reserves, but a lot of those silver mines that are running, they're not, the majority of the revenues are not even coming from silver. They're coming from base metals. So who knows how much longer this can continue, but the primary silver miners, as Steve St. Angelo put out in his article, I mean, they've had to drastically reduce production just to maintain any kind of margin, but the base metal, the silver byproduct from base metal miners has offset that, and that's why annual silver supply has stayed high. It stayed high from the silver byproduct. It's not from primary silver miners bringing on new silver mines. Well, I want to transition now, Eric, to talk about some of the geopolitical. Actually, last thing about gold is, the gold community is talking about Ray Dalio. Ray Dalio is now a top 5 owner. He's a billionaire hedge fund manager, Bridgewater Partners. He just bought a bunch of GLD, but that's not buying physical gold. That's paper gold. So it's good maybe that he wants gold exposure, but it's not going to affect the paper price of gold because he's not, going out there and saying, like Kyle Bass or David Einhorn or some of these other big shots and storing physical metal. He went out and bought a bunch of shares of GLD instead.
Yeah, I don't know. I mean, we all know clearly that there's a lot of monkey business going on with these major ETFs, and GLD's prospectus leaves a lot of gaping holes with the ability to play footsie with what's inventoried for the gold bars, et cetera. And we even have documentation that some of the serial numbers that were inadvertently shown on television when Bob Pisani was holding up bars that didn't match and even. Oh, sorry, I misremembered. Somebody who actually owned one of the bars that Pisani was holding would actually match their inventory serial numbers and whatnot. So we actually know that they've done some pretty strange things going on there. But
yeah, I mean,
the reality is that GLD does suck up physical bullion in London when the price is expanding, and it dumps physical bullion as well. So it does have this kind of like steam valve effect on the physical market, which in turn will in fact move the price. We've gone through periods where GLD will shoot up and there'll be like 200 plus metric tons in a month of buying by investors that are pushing the price of the ETF up. It's overstating it to say that it's 100% a manipulation vehicle. They actually do have physical bullion, and it does have an impact on the market. So it's good to see people like Ray Dalio coming in and buying a bunch of GLD. And if the professional Wall Street community were to actually follow advice like Kyle Bass and recognize that it's actually cheaper to take physical delivery and store it in independent warehouses. I mean, if you're a billionaire hedge fund, it truly is cheaper to actually hold your gold that way versus going and buying GLD. If people like Dalios of our world were to go and actually buy physical bullion, I mean, we would be looking at prices north of 2,000 right now. So it's absolutely the case that the GLD is part of the manipulation paradigm. It's used like a play toy. It's useful to the cartel, but it also does, in fact, move physical prices. I mean, it's an overstatement to kind of completely poo-poo what Dalio is doing. But the problem is that most hedge fund managers just don't really recognize that they're not buying real security. If we have a market crash, they're not going to have any insurance value optionality out of GLD necessarily because, the instrument can be restricted on financial markets. We literally had financial markets closed when we've had crashes. What is that going to do for you? If you don't hold it, you don't own it.
And yet, despite some of the news stories coming out, whether it's geopolitical tension, Saudi Arabia declares war on Lebanon and Yemen, potentially enormous Saudi coup and house cleaning, potential proxy war with Iran in the near future, the things in the Middle East getting worse, the oil price, having enormous price volatility in the last month or so, emerging market junk bond debt issuances soar. China issued the gold community and the alternative media are completely ignoring this, in my opinion. The People's Bank of China, the head of the People's Bank of China, has been issuing very severe warnings about China reaching its Minsky moment. High-ranking members of the Chinese Communist Party officials are also warning about an unsustainable credit bubble in China. So, there's a lot of, let's say, really bad news stories that would affect markets. And Eric, it seems like all the stock markets, bond markets, all the conventional markets, stock, bond, real estate, cryptocurrency maybe is a way out of the system. Some people are looking at it as that because it's not as manipulated as, say, gold and silver. But, normally in the past, Eric, like these types of news stories, we wouldn't have the Dow, shrugging off bad news and moving higher. We wouldn't have, strong conventional asset markets like we do now. So things are really out of whack.
Well, I mean, it just gets back. It's really quite simple. It gets back to the $300 billion that the central bankers are dumping into the damn markets every month. You can have a hell of a party when you drop $300 billion on the floor. That's what's going on. And, that's what? The entire market capitalization of Bitcoin in 1 month?
Something like that. I mean, Bitcoin's not to 300 billion yet. Bitcoin, the total cryptocurrency market cap's almost to 300 billion. I mean, before this bull market's over, I think we're going to see well over $1 trillion in total cryptocurrency market cap.
Oh yeah, but I misspoke. I apologize. I meant the whole market, not Bitcoin.
Okay, but the technology bubble, was the technology bubble before it blew up, Eric? Was that over $5 trillion in total market cap?
Yeah, I don't remember off the top of my head. I think it was around $6 trillion or $7 trillion generated just for the tech. I mean, you also had bubbles hitting things across the board. The entire S&P 500 is in a major bubble in the technology industry in terms of its percentage of capital weighting in the S&P 500. I think maxed out at something like 33%. I mean, anytime we get any market segment in the United States S&P 500 universe over 30%, that should be like sending you some major warning signals. And we've seen that with finance. We got around that neighborhood when we were going up the, the bubble trajectory for the housing bubble leading into 2007, 2008. But again, currencies are different than stocks. And when you're talking about a single currency or a single currency paradigm and, 4 currencies that are attracting 80+% Pareto principle of market flows of, the aggregate, you're going to see a higher ability to see much bigger bubbles than just a stock market. And that's what we've already seen. I think that explains why we're seeing cryptos just going absolutely crazy. And it's a reflection of this $300 billion coming into global markets every month.
And these central banks, Eric, are threatening to taper, but the Federal Reserve, despite threatening to taper, I think the balance sheet is actually slightly increased.
Yeah.
And now the balance sheets for the Bank of Japan and the European Central Bank are both a lot larger than the Federal Reserve's stated balance sheet, although, we're not having any independent audits of any of these central bank balance sheets. Who knows what their real balance sheets are? The People's Bank of China has an enormous balance sheet expansion explosion there too as well. I think, honestly, Eric, no government right now, especially the large governments, are doing a good job. They are just total fuster-clucking everything. They're just totally screwing everything up. Everything's out of whack. Everything becomes more and more divorced from reality on a daily basis. The politics, I don't want to get too much into the politics that's going on in so many different countries, but that's only making things worse. But, from an economic perspective, these central banks are totally distorting the markets. And we're seeing, just evidence of this everywhere. Even the Economist magazine last month came out with a cover asking if everything was in a bull market. And if things start hitting the Economist, it's like it has to be really obvious.
It's a sign of a top.
Well, I maybe in some of the assets, but I mean, if the central banks are going to keep putting in the liquidity, who knows? So, maybe we get an interest rate increase from the Federal Reserve. Maybe you think we'll see another interest rate increase in December from either Janet Yellen before she goes or the new Federal Reserve chair?
Yeah, I believe they're going to pull the lever in December. That's been their pattern. Part of the reason is this timing in terms of the calendar year and what they're doing with liquidity and all that, and then how they maintain market expectations that they're actually worthy of the credibility that they're trying to engender in terms of market expectations. They've been nursing that whole paradigm expectation of them yanking the interest rate lever in December, so they actually have just pushed themselves into a corner. They have to do it. I think that's what's going to happen. But, the real interesting situation is going to be in 2018 when, if we were talking about copper, for example, if in fact we are seeing tighter markets and inflationary pressures percolating around the edges as this kind of monetary largesse leaks out of capital markets and moves into the real economy and actually starts pushing up real economy prices, that's going to push up interest rates. That can rattle bond markets. We have the biggest bond market bubble in world history, and at some point there's going to be leaking out of this bubble that they're not going to be able to control. You can't just, paper over this problem with more. You can't fix a debt problem with creating more debt. It's not going to work. And at some point, they're going to lose control. And I thought that they were going to lose control this year, but I underestimated the degree to which the central bankers were willing to push the paradigm further by dumping as much as $300 billion per month in the markets. Nothing like that's ever happened, ever.
Well, no one really cares, Eric. The majority of people are not going to complain about all of this if their house price doesn't crash if it's going up, or the value of their retirement, their 401k and IRA value. If you're not a woke American, if you're just a regular everyday American, you go to work, you watch mainstream media news, Fox News, or any of the regular Democrat mainstream media channels, as long as your account value is going up and your house price didn't crash, you might not be aware of that there's any real problems in the economy.
Corporate profits have been in a downturn, generally speaking, other than going sideways with one or two blips on a quarterly basis that were tiny. Since 2012, the fundamentals in the stock market suck.
The corporate profit stuff, Eric, all that to keep them high is from
buybacks.
Financial, share buybacks with debt. Over
Take away
$1.4 trillion.
$1.5 trillion in buybacks, and the profits would look even more, you punk. I mean, this market is ridiculous.
Yeah, it's one of the four most highest value stock markets in history, 1929, 1999, 2007, and now. There's an argument to be made. I haven't seen anyone actually do the numbers and try to back out all the share buybacks from the large cap publicly traded corporations. But I think if someone did, they would see that there's over 1.4 trillion or over 1.5 trillion with artificially cheap debt, like you said. And I think, the PE ratios.
It's been done. There have been studies. We're talking 1.5 trillion. That's what it is. And there's another thing, too, about this market that, you're drawing comparisons to the 2000 blow off top of the NASDAQ. The kind of accounting permissibility and deviation from generally agreed upon accounting principles in our financial markets is actually pretty shocking. I mean, the kind of liberty by which treasurers, corporate treasurers, and CFOs take when it comes to massaging, quarterly flows through the cash statement and income statement these days is pretty shocking. I mean, the kind of footnotes that go on, and even things that are allowed to not be fully documented.
Oh, almost all of them are non-GAAP. So, I mean, in the past, that would 10, 15, 20 years ago, that could potentially have gotten you in prison. But now a lot of companies, almost all their reporting is non-GAAP. So, and people, they've come up with clever sayings saying, oh, our business, we don't need to be GAAP compliant. But, I mean, if the majority of businesses should be GAAP compliant, and you can tell there's financial engineering because sometimes the net income will be so much larger than the cash flow. And so cash flow is a lot harder to manipulate than the net income is with a bunch of, accounting, financial engineering, accounting. I don't want to get into too many details for our listeners, but I mean, there's so many things going on, and yet, the markets are just shrugging all this off and things are going up. President Trump, Eric, we're over a year now since Trump won the election. Any positives or negatives in your opinion? What are some of the bigger positives or negatives in your opinion that he's done so far?
Starting with the positives is probably the best way to go because there really aren't that many. I mean, compared to what he promised to deliver, his what I consider to have been positive developments are far and few between. He put a kibosh on the Trans-Pacific Partnership trade deal, and that's being channeled into, presumably, I mean, at least the policymakers are talking and speaking to the press about how they would presumably try to do separate deals and bilateral things and all that. And so that could conceivably be a better national or economic nationalism-oriented policy, which is what he was campaigning on. So I guess conceivably that could be a positive. What else? I don't know. I mean, conceivably he's going to get some kind of tax reform done, but the Congress is a mess. Deregulation is kind of stalled. And then as far as his foreign policy is concerned, the guy's a basket case. I mean, he did not dial back tensions between the United States and Russia, and he's escalating ties with Saudi Arabia, and the escalation within the Middle East is being fanned by some of the policies that are coming out of the Trump administration. So all told, I'd give him a D-.
I think he's done some small things that are positive. So, releasing the JFK files, I'm not sure how much of the stuff was redacted.
It's kind of irrelevant, frankly. What was it, 3,000 pages, whatever? I mean, there were no major revelations in that.
He did reduce some regulations. He did put in a pro-Constitution Supreme Court judge. So that is, in the whole long run scheme of things, I think that's somewhat important. But yeah, I mean, he's taking credit for when he was a candidate, he was talking about the jobs numbers were bogus, that the U6
market was going to crash.
Yeah, so he said all the rhetoric that people in the swing vote, a lot of libertarians were willing to hear, and I think a lot of libertarians compromised and voted for him and won, and now he's taking credit for the stock market rising. He's saying the jobs numbers are good. I mean, the real economy is not creating a lot of good, high-paying full-time jobs right now still. Some of the jobs he is bringing back, the manufacturing investments, a lot of them are going to be automation and robotics. So there's not going to be as many human beings working at these factories. So there will be investment in the United States, but there's not going to be as many human beings working at the factory. So that's just the new normal, though. That's not really Trump's fault. That's just the new normal. I mean, wages have risen so much in China that a lot of Chinese factories are rapidly automating as well. So that's just the new normal all across the globe in terms of automation and robotics for factories. But, I think the effort, at least Trump in some instances, Eric, is at least trying to do trade deals to bring investment and jobs back. I do not remember Obama trying to do this nearly as much as Trump is. So I think there's quite a bit more effort in terms of Trump at least trying. But I mean, I really hate Trump's foreign policy. I mean, he's basically gone full neocon at this stage, and I'm totally terrified that he's going to basically use, I hope I'm wrong about this, but I think he's probably going to use North Korea as his like Hiroshima or Nagasaki.
Yeah, that's not going to happen. North Korea is kind of like a sideshow. It's like the magician pulling a rabbit out of his hat with his right hand, and you're paying attention to what's going on the left. It's a distraction. It's very unlikely that the United States would take any kind of military action against North Korea, because the chain reaction that would result would be just so horrific. The kind of military artillery batteries that are facing Seoul, just as but one example, can kill 1 million people in 24 hours. It's just not likely that we're going to poke the bear that much and see what Kim Jong-il is going to do. But it is useful to be able to stir up concerns about war, because it serves their interests in a manifold of ways.
Yeah, and the military-industrial complex then gets to say, hey, we need to replace these old nuclear warheads. So here's another extra $50 billion in contracts for that. Or we need more spending for this and that. So the military, pretty much no matter who's in office, in Congress, Republican or Democrat, or whoever the president is, Republican or Democrat, the military-industrial complex doesn't get massive cuts. So they're pretty much going to win out economically. Well, a couple news stories before we let our audience go. There's the Uranium One scandal. I think, Eric, the more details that come out about the Uranium One scandal, hopefully this whistleblower will be able to testify. Will be able to testify in front of Congress. The guy has videotape of bribes, of cash changing hands, and he has thousands of documents. Pretty amazing. But I think besides Hillary Clinton, Eric, I think there's at least 5 or 6 high-ranking government employees, whether that's Eric Holder, maybe even President Obama, who are involved in, high treason and RICO. And, I don't think any of these guys are going to get prosecuted, sadly.
Yeah, and you know why? It's because the targets that are potentially being investigated have control files. I mean, Hillary Clinton has dirt on everybody. If anyone was ever to get close to Hillary to the point of actually conceivably making a case out of anything and getting her, to serve justice, she would let out neutron bombs all over the place and take down people because of what she knows about them. So that's kind of like the situation that we're in. It's like a status quo freezing up of the deep state.
And we can't count on Congress to do the right thing. I mean,
They're all corrupted.
Yeah, they're corrupt as fuck too. I mean, they're mostly do nothing Congress, and look at all the sexual harassment money that's been taxpayer money that's been spent. You know, if the majority of those congressmen were Republicans, Eric, I think that would have been leaked to the mainstream media. Okay, so $17 million in the last like 12 years or so on sexual harassment settlements. If there was a lot of Republican congressmen who had settled those sexual harassment claims with taxpayer money, I think we probably would have heard about it in the mainstream media, given how politically biased they are. So I think it's almost all Democrats. You know, the John Conyers guy, he has signed legal affidavits admitting he did the settlement and the harassment and stuff signed by him, and he's still denying it. So, and he still won't resign. It's these scumbags are just, and you know, I don't like the majority of neocon Republicans are awful too. McCain's awful, Paul Ryan's awful, Mitch McConnell's awful, but the Democrats just seem to be more hypocritical, more brazen. They don't care if they're hypocrites. It's just truly breathtaking that the people who represent us, who create laws, who spend the majority of our tax dollars, are able to get away with this shit.
Yeah, yeah. You know, the sex scandals and all the dirt that goes into control files is something that's, I mean, and J. Edgar Hoover was an expert at it, and it's been with us ever since.
Cross-dressing Jay?
Yeah, cross-dressing Jay, and a lot of our listeners probably remember the Franklin cover-up and how under the Ronald Reagan administration and George H.W. Bush's guiding hand, they were bringing in people and young boys into the White House from around the country and places like Nebraska and whatnot. And there's a lot of dark, ugly things going on at the very top of our political society that's documented. And people don't look at this stuff because it's so horrifying.
So is it a requirement now, Eric, in order to be a congressman and rise up in the committees and, you know, Speaker of the House, that you basically have to be a rapist or a pedophile or a sexual harasser?
You got to scratch your head and wonder sometimes. I mean, these rascals are just so nefarious.
And speaking of nefarious, you know, last year's Lifetime Achievement Award for scumbag nominee George Soros, I mean, he just keeps getting worse. Did you see this guy is giving $18 billion worth of his estate over to, you know, charities to fund, you know, basically domestic terrorism, to fund riots, to fund, you know, social warfare, class warfare, gender warfare, racial warfare. The guy is just a James Bond villain. Unbelievable.
Yeah, and he'll probably win the Scumbag Year of the Award again.
He'll probably be reincarnated in, he'll probably download his consciousness to a young robot and he'll live forever.
We got away with David Rockefeller checking out from planet Earth before they were able to turn him into a cyborg, so maybe we'll escape with Soros not living forever.
And Zbigniew Brzezinski, Mika's dad, he passed before that too.
Poor guy.
Yeah, I mean, I found that quote about Zbigniew Brzezinski, I found it recently, and I don't remember when he said it, but the quote said basically that the American people would be so dumbed down from just watching the news that they wouldn't have any independent or critical thinking. They would only be able to parrot whatever they had just heard on the news, and that's basically the society that he wanted to build.
Yeah.
So, you know, welcome to Dystopia. Things are just getting more crazy and more out of whack. But, you know, this is why, for listeners out there, I've been saying this, Eric, as you know, for well over a year now, probably over 2 or 3 years. I've been covering Bitcoin since 2010. And, you know, I've been telling my listeners to diversify and at least own some cryptocurrency, own some precious metals, own some mining stocks. If you're high net worth, maybe buy some rental properties for cash flow outside of the stock market. And definitely own some cryptocurrency. So stay diversified. I think the mistake that a lot of people are making, that I'm hearing from a lot of listeners to the show and other people I talk to, is that a lot of people right now, Eric, because the cryptos are absolutely on fire, like Peter Brandt said, the best bull market arguably of his entire 43-year professional trading career, a lot of people are liquidating everything in other asset classes, stocks, bonds, real estate, other things, precious metals, and they're chasing the cryptos. And so, you know, getting rich quick sounds good, but, you know, if it actually worked, there would be a lot more rich people in the world. Anyways, this This is episode 38 of Welcome to Dystopia. Eric and I want to thank you guys for listening, and we're going to try to get the show back on the road and get it more routine going forward. So everyone have a great happy holiday season. Hopefully you're not too stuffed from Thanksgiving if you're an American listener, and we'll be speaking to you guys again soon. Wall Street for Main Street needs your help. Since the middle of 2016, YouTube continues to increasingly censor and sabotage the growth and success of my channel with dramatically slower or no subscriber growth, a huge decrease in views per month compared to 2016, and well over $10,000 lost in Google AdSense revenues the last 18 months. I should have been way over 20,000 subscribers and way over 3 million views last year, but it feels like I am Sisyphus trying to roll a heavier boulder with more and more additional weight up a steeper and steeper hill. In the last few weeks, all of my videos have been set to demonetization by default, and I have to manually protest each video. This is in addition to even lower than usual Google AdSense revenues after the adpocalypse started over a year ago for me. This has also affected my ability to get paid advertisers to agree to deals not involving YouTube, as I lost $3,000 per month in paid advertising deals at the end of June 2017 because all my analytics are down a lot thanks to YouTube censorship algorithms that have intentionally kneecapped the growth of my channel. With YouTube/Google/Alphabet /Don't Be Evil strongly considering demonetizing or setting all libertarian, conservative, or pro-Trump content to private to prevent any sharing or monetization, it is imperative I have a contingency plan to figure out how to make a living off my content. Each 30 to 40 minute video takes a few hours of my time before it's released to the public. There's a strong possibility that in the near future, YouTube will force me to move all or almost all my content to a new video upload website that allows free speech or behind a paywall on my own website. Thanks if you have already made a one-time or recurring monthly donation, and thanks in advance for any future donations as I decide the future of my channel and what to do with my content going forward. We accept one-time donations on the Wall Street for Main Street website via PayPal, Bitcoin, or Gold Money. You can also become a monthly Patreon contributor for $1 or more a month if you want to help me out. And don't forget to like each video on YouTube and share it with your friends and family if you think they would like the content.